The IRS has changed how they calculate the cost basis of the coins and tokens that you sell. They have reversed, or let's say they've reversed the guidance that they gave back in 2019 on the FAQs. They are retroactively applying these rules to prior year tax reportings. So let me just break that. What does retroactive mean? Let me put it in these terms.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description.
Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Clinton Donnelly, who is the CEO of CryptoTaxAudit. Clinton, great to see you.
Hey, it's great to be back with you again, Tony.
Yeah, Clinton, we've spoken many times over the years talking about different issues as it relates to the IRS, crypto, and taxes. Well, we got a big deadline tomorrow, Clinton, and I wanted to have you on to break it all down for us. But really quick, for folks who may not know about CryptoTaxAudit, tell us a bit about you and the company.
Well, I think that's good because a lot of people are getting advice from Twitter and places from people who are telling them about the safe harbor allocation plan. But we are actually the experts. We actually do it. We calculate the crypto gains for people. We prepare tax returns in a bulletproof manner, and we defend people in audits before the IRS. Let me just say our credibility. We have gone up. We have defended 50 people in audits of their crypto reporting. 40% of the time, they're getting refunds back. Think about that. IRS came after somebody and then they paid. That's how good we are. Secondly, we've taken 4 cases up to U.S. tax court. We have fought and we are undefeated. We had one customer, they wanted 1.5 million. We won. Another guy did like-kind exchange. We won. And we have other cases where the IRS came after the gain calculation. We're winning. We have in-house forensic accountants that, to be honest, we decimate the IRS when it comes to gain calculation. So that's who we are. It's kind of the thing of, do you want to, have a surgeon who has only watched the YouTube on how to do a heart surgery, or someone who's an expert at it? And that's the advice we're going to give to you today. There's a crisis right now in crypto tax calculation, and it's of Congress's own making. Back in 2021, the Infrastructure Reduction or Inflation Reduction Act put in new tax laws which required reporting on the 1099 DA, which we'll talk about later. But the IRS came out with regulations implementing this law. It came out in July. We started posting things on it. We started analyzing it in August. We were actually involved in the pre-analysis of it with the IRS, but it became official in September. We started posting a methodology for people to comply. Here's the issue. Here's the crux of it. The IRS has changed how they calculate the cost basis of the coins and tokens that you sell. They have reversed, or let's say they've reversed the guidance that they gave back in 2019 on the FAQs. They are retroactively applying these rules to prior year tax reportings. So let me just break that. What does retroactive mean? Let me put it in these terms. Unless you take action, which I'm going to describe with the safe harbor allocation plan, all your gain calculations that you've done in the past are pretty much wrong. Okay. Wrong in a big way. I have one client, we did an analysis both ways, and there was a $1 million difference or increase in the gain calculation that the IRS would use. Why is this? The IRS has changed the rule of how they do gain basis selection on 2 ways. One is it has to be FIFO. Some people have used other methods than FIFO, first in, first out. And it has to be on a by wallet consideration. Almost all the gain calculation services, by that I mean Coin Ledger, Zen Ledger, Token Tax, TaxBit / TurboTax, all those services do not offer a by wallet method. All right, so if you used any of those 4 or 5 services I just listed, all your gain calculations are wrong unless you take advantage of the safe harbor. Okay, why is it at risk that these past years are wrong? If you get audited on the prior years, you will be hit with not only the additional tax that the IRS wants to hit, but accuracy penalties of 20 to 40% plus interest, multi-years of interest. This is big. All right. The other services I didn't mention, they offered a by wallet, but typically the default was a universal or single wallet approach, which also is no longer valid. So virtually everyone has wrong gain calculations based on these new IRS rules. You did the right job, but IRS has changed the rules underneath you. Well, we argued back in 2023 to the IRS when they announced these plans. So we said, you got to give us a plan to transition, right? Because we're using your old guidance. Now you're going to apply the new guidance, but we have a transition plan. They did release this in August. And what the transition plan, basically, the summary of the transition plan is, okay, we'll take the unused cost basis from your prior calculations and we'll apply it to your inventory of coins going forward. In a sense, drawing a new baseline for your gain calculations at the beginning of 2025, right? So that's actually wonderful. And I tell you, IRS really wants everybody to do this because they hate doing gain calculations as much as you do, especially because when they come up against me, they're losing, right? So here's what everybody needs to know. It's a multi-step effort, but you need to do 2 things. You have to do it as fast as possible. The deadline officially is December 31st, 2024. All right. But if you're hearing this recording and it's past that date, if it's 2025, you should still do this. I can at least in an audit argue that, well, we didn't do it by the 31st, but we did it 15, 20, 40 days later, and we can be pretty close. I can argue that in a court. Okay. So just do this. Here's what you need to do. You have to sign an allocation plan. And we made it very easy. You go to our website, CryptoTaxAudit.com/1099, and it's right in your face. It shows you how to sign a safe harbor allocation plan. What that is basically it's basically an e-signature of a document. You keep a copy, we stick a copy in our files, nothing goes to the IRS. Second step you have to do is you have to inventory all your coins and tokens, right? And you do this, you have to document like a timestamp of when this happens. How do you do this? Well, screenshots, if you're using your phone, you can do usually the timestamp and the metadata. All these things are important. Take the screenshots, save them in a permanent record so don't lose them, right? What we want to do is just simply document where all your coins and tokens are. And people have questions. They go, what about my staking tokens? What about this liquidity pool? It's like, hey, just document as much as you can. Get the timestamps. How would you do that? Like usually in your bottom of your screen, it has a date and time. Capture that in the screen image. Just document every hard wallet, cold wallet, online, off, hosted, unhosted wallet. Document everything. And you will work out, and then we'll explain when you sign up for their safe harbor allocation plan. We'll get you emails later in the year to explain what the next steps are and how to move forward. But you need to do a sign up for the safe harbor plan. It has to be documented that you did that. And secondly, take the inventory. Sorry, that was a mouthful.
No, that's great. And thank you for explaining that. A couple of quick questions people will have. Is the sign up free? Is there any contract or anything like that?
This is totally free. We've made it free for the entire crypto space, and we're not charging for it. We will send you emails talking about what the next steps are and how you can get that done, how you can get help to do it if it's beyond your doing it. But it's totally free for the community.
And then the screenshots that you take, right? Let's say, for example, I use the Ledger hardware wallet and I can pull up the Ledger software dashboard. Is it just a snapshot of the dashboard, or do you need to actually see the wallet addresses?
It's not 100% clear what we need to impress the IRS, but I think we believe that it would be good to have the wallet addresses, and it could be a fraction of the wallet address. You know how they kind of do a dot, 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 right? That's fine.
Right.
All right. If you go like to Ledger, it'll say, well, you have this many Bitcoin, Solana. It'd be nice if you could open that up a little bit and we could see like, oh, you have 2 wallets of Bitcoin and here are the different addresses. That would be good if you can screen capture everything, right? Because when we have to look at this, it'll, we may not remember what you did. Just copy everything, document everything.
And does this include centralized exchanges? So let's say I'm using Coinbase, Uphold, or whatever it is.
Absolutely. Now, those guys, you don't have to worry about the address so much, right? Because they are using pooled addresses, but you just want to show that on Coinbase, I had this many of this coin, this many of that coin. We're not worried about when you bought them or anything like that. We just want to know what do you have right away. And you can do that today. You can do it tomorrow, or if you're doing it 2025, just do it. All right. Now, I will say, a lot of tax businesses are all of a sudden waking up to this need for the safe harbor allocation plan. And I'm sure people have seen things, but these companies, big red flag, if you're just hearing about it now from those companies, means that they really weren't thinking about it. We've had our safe harbor allocation plan up. People started, the first sign up we had was September 12th, and we've been getting them in by the hundreds every day thereafter. So, and I've seen a lot of bad advice out there. I saw one gain calculation service said, hey, here's the email. You need a safe harbor plan. Just save this email, and that's good enough for a safe harbor plan. No, I argue cases in court with lawyers. Just saving email is inadequate. So the advice you're getting from these people, you have to think, have these guys ever done this? Have they ever gone to tax court? Do they understand the evidence rules? That's not adequate. So trust me, we've set this up. The e-signature is the way to go. And the screenshots comply with the IRS instructions. So if you do that, you're going to save yourself a world of pain.
And with regards to the screenshots, we're just saving that locally to our computer. We don't have to upload it to your website yet, right?
No, you don't have to at all. If you're our customers, you can take those files and store them on our system, just like to have a backup. That we're okay with that.
Sure.
But really, it's just your own files, and I would highly recommend maybe you stick it on a memory stick and stick that thing in your tax records that you keep each year, because we'll need to break it out later on in 2025 to calculate the baseline. And then we'll need to save those documents for multiple years in case you get audited. So, but we'll send you emails on all those steps. Some people have said, what about NFTs? Screenshot it. All right. Just get a screenshot. The screenshot should always have the time and date stamp on it. Whatever you use, capture it and get it off your phone, get it off your computer into separate storage so it doesn't get lost.
So just to confirm, and I'm recapping for folks who, this is all brand new to them. This is a preventative measure, right? Just in case the IRS gets tricky or whatever the hell they plan to do, that you have this documentation, and if you get audited, you have this information ready.
Yes, everybody should do this. Even taxpayers who have not been filing their taxes on their cryptos, right? So even if you're one of them, please do this. The safe harbor plan does not go to the IRS. Nobody knows you've done this. It's just your private records, okay? But I can really save you a world of hurt if you do this, even if you're a non-reporter, because what this allows us to do is it stops the IRS from going back to your crypto transaction records in prior years, starting with 2024 and going back into prior years. And as we all have frustrations getting those crypto records, and exchanges have closed down, the records are incomplete, they're unstable. You can't get all those records. So there's lots of holes in the data. Well, this establishes a new baseline for all your records, and we will no longer go back to those prior years to calculate your gains. So this is good for everybody. Trust me, the IRS wants you to do this, all right? And as somebody who defends you in tax court, I want you to do this, all right? And it doesn't take much work. Just sign up and then do the screenshot, which is and if you don't do any trading after the screenshot. So if it's, once you do the screenshots, kind of lock it in. That's just if you're doing this in 2024. If you're doing it in 2025, what you want to do is make a copy of any transactions you've done from the first to the date that you actually did the snapshot, so that we can actually reconstruct your beginning of year inventories.
Yeah, and that's a great point, with regards to having a snapshot, because I think back, I've been investing in crypto since 2016. There's certain coins, I don't remember what the hell I paid for them, and that I moved it from this wallet to this exchange to this and that, and I'm like, if you ask me, what my initial cost was, I don't remember. So I understand, the having this in place just in case the IRS goes bonkers, going after crypto.
We've done several AMAs, and people bring up that type of question. Document everything. Go look at wallets and exchanges that you haven't used for years. All right. Like I had an exchange, Bittrex. All right. It closed down, yes. I think earlier this year.
Yes.
They kept on sending me. I thought I heard this notice, Bittrex closed it down. I didn't worry about it. I went there, and lo and behold, I had a couple of Bitcoins sitting over there. It was like, oh my gosh, I'd forgotten all about it. So you need to do a complete inventory. All right. So go to all the old exchanges that you use, try to log on, try to get a copy. If there's any loitering or lingering coins there, you just want to document everything. Hey, there's a really big question that a lot of people bring up, especially people who don't want to comply. They say, well, hey, Donald Trump is going to throw away the tax code and not going to tax crypto anymore, right? Well, Donald Trump is a great guy. He's a politician now. And, the thing with politicians, how do you know they're lying? The lips are moving, right? So let's speak about that right away. You need to do this. This is the policy. If the IRS changes and all of a sudden it's not taxed, well, that's great. You haven't wasted any time. But if the laws remain as is, you will want to have done the safe harbor allocation. And I've heard rumors from some people in the Trump administration that they want to not tax crypto. I don't think that will happen. I think that is idyllic thinking by people. Here's why. They do tax bonds, they tax stocks, and if all of a sudden there's an asset class where there's no tax, it would steal from the stock market. Everybody would flood into the crypto market just for the tax benefits. Well, that would destroy the economy and depress prices on the stock market. So that won't happen just at that level. Secondly, there is a massive tax gap, that is the amount of money that should be collected that isn't. And the IRS commissioner has identified that the number one culprit, the reason for this tax gap, is crypto investors not paying taxes on their gains. So Donald Trump is a businessman, and he's going to slash the budget through the Doge program and everything like that. Yes, but he's not going to slash his income yet. All right. So he's going to be focused on income in order to bring the deficit down. So I see no reason why Trump is going to change the taxation significantly on cryptocurrencies. And if it does, it will not be retroactive. It would be going forward. All right. So everybody needs to do this. Don't let that paralyze you. Just go to our website, CryptoTaxAudit.com, 1099. It's in your meeting notes. And sign up for the safe harbor plan, do the inventory. We have an extensive amount of information on that webpage to answer a gazillion questions. I think there's 30 or 40 FAQ questions in there, and videos. So
awesome. And to your point on the tax, I don't see Donald Trump stopping taxes on crypto anytime soon. If one thing's for sure, the government, and this is a bigger government problem, right? The spending, they need the money. So I don't see them cutting that off, especially if people are going to make incredible returns on crypto. So you can't bank on that, right?
Oh yeah, I think Elon and company will go through and they'll identify a lot of people in the IRS that they want to get rid of, probably at the management ranks. Okay, but the IRS is rapidly increasing headcount. Yeah, they need to, and they're supportive, and they're bringing in more income. They have right now 8,000 auditors as of their last data print, and they're budgeted to bring on another 29,000 auditors over the next 4 years. So that's a 4x growth in number of auditors, and they're going to be focused on people making more income, which is basically all crypto traders, not on the lower end where they have been, bothering people. So yeah, crypto people, you're in the headlights. You're a target zone. Even Donald Trump wants to squeeze non-compliance. I mean, he wants everybody to be legal, and Donald Trump has suffered a lot of abuse from the IRS. All right, and he expects everybody else to go through and comply as he has. So yes.
Awesome. Clinton, this is very important, and I still have to do it. So I'm gonna take care of everything tomorrow and make sure I sign up with the safe harbor. And obviously tax season approaching general, right? So if you make crypto trades in 2024, the typical things, you got to report everything, pay your capital gains tax, right? Whether it's short term or long term.
Absolutely. Let's talk about that. Anytime you sell, you could be swapping one coin for another coin or trading it for fiat. Anytime you sell, exchange, or otherwise dispose of a cryptocurrency, you're experiencing a gain, or hopefully maybe it's a loss. We'll just call it a gain. All those gains are taxable, and your losses are offset those gains. So you're taxed at the end of the year on your net gains. Now, you're taxed on what we call realized gains. All right. You may have a coin that's gone way up in value, but it's not realized until you sell it or exchange it. So you don't have to pay taxes on it until you sell or dispose of it. So there's no tax on hodling. All right. Also, if you receive staking rewards, they're taxed at the fair market value in US dollars on the day they're allocated to you. So, and there's lots of little nitpicking things in there, but that's generally you're going to be taxed at your ordinary tax bracket for the staking rewards and airdrops. There's lots of subtlety here. Could they strip out these regulations from the IRS? I don't think so. I don't think these would be the regulations they'd be stripping out. I think there are tax court cases and other court cases that may change taxation. That's true. We're hopeful for those things, but you're responsible for complying with the laws as they stand right now. So, we prepare at CryptoTaxAudit. We prepare. Most of our clients are medium to very large traders. We've had traders to do 5 million trades in a year. Had another client had 75 DeFi wallets he traded out of. I mean, just wow. Immense complexity. We get it done because we're full service. We then file a tax return that we call it a bulletproof tax return. We put extra things in the tax return that you wished were there if you knew in advance you're going to get audited. And the proof that it works is the fact that none of our clients are getting audited. All right. So we understand the audit methodologies that the IRS is using, and we kind of do a little jujitsu on those things to protect our clients, basically over and above to make them undesirable audit clients in a sense. So that they keep them safe. And we also, we have an insurance program. It's like car insurance if you get audited, so you don't have to pay outlandish amounts for an audit. It's kind of like a monthly insurance program, and we have significant signups on that. So,
Now, Clinton, there's been lots of talks of 1099 DA. Is that relevant for this tax season? What is that all about?
Well, a 1099 form, and everybody's gotten 1099 forms of different types. And they have different, it's like 20 or more types. This one's called a DA. DA stands for digital asset. That's the IRS's terminology for crypto. And it's basically going to report the amount of gains that you made from exchanges. Okay, so it's going to come from Coinbase, Uphold, Kraken, Gemini. These guys are going to issue them. They're not issuing them for your trading in 2024. They're going to issue it reporting your trading activities in year 2025. In other words, you're not going to get those 1099s until January of 2026. Okay, so, and a lot of people are panicking, and just know that the IRS, these exchanges are tracking activity, and it will be reported next year. But for doing your taxes this year, do it the same way you've always done it. Okay, don't change your cost basis settings. It's business as usual for filing your taxes for the 2024 tax year. Okay. So just don't panic, don't change any of your behavior. Sign up. We'll give you emails throughout the year. We'll tell you how to do the conversion and how to get set up for next year.
Awesome.
But we can talk. Let's the safe harbor plan. That's all you should worry about. You and I can have a call. January, February next year. And we can talk about what the 1099 DA means and how you can prepare for that.
Oh, absolutely. We'll definitely have to do that. And as tax season approaches, I think having a refresher of some of these things for folks as they get ready to file. But Clinton, just to recap for folks, go to cryptotaxaudit.com/1099, sign up, then take the screenshots, try to get the timestamp as best as possible.
Date stamp is most important.
Date stamp, yeah. And then for the like hardware wallets or self-hosted wallets, make sure you get some of the wallet address. It doesn't have to be the full, but part of it, and just document all this stuff and store it safely.
Yes, perfect description.
Perfect. Well, Clinton, thank you so much for taking the time to explain all this. And I'll be sure to link to cryptotaxaudit.com/1099 and all the relevant links explaining safe harbor and so forth. So go check it out. Clinton, thank you so much for taking the time to explain this.
Have a happy new year. Maybe go to the moon in 25.
Absolutely.